Avette here. Vince has decided to see how I handle the reins, and in this episode, I'll be breaking down this month's market outlook, the signals you should watch, and the opportunities that might surprise you. So let's get started, shall we? Let's start with the headline everyone's whispering about: the Federal Reserve and the possibility of a rate cut. Markets thrive on anticipation, and right now, the anticipation is electric. Will the Fed cut rates sooner than expected, or hold steady and keep investors guessing? Here's why it matters. When rates come down, borrowing gets cheaper, companies expand, consumers spend, and growth stocks often surge. It's like oxygen being pumped back into the market. But the Fed won't move without signals. Inflation data, job numbers, and consumer spending are the clues they are watching closely. For everyday investors, this isn't just policy talk, it's about positioning. Rate cuts can shift momentum fast, and those who prepare early often benefit most. And that's why we're looking at names like Palantir, Archer, Applied Digital, Grab, and Nvidia. Each of them reacts differently to a rate cut environment, and dollar-cost averaging could be your best weapon against uncertainty. Now, let's shift from the big picture to specific stocks, starting with Palantir and Archer Aviation. Palantir is more than just another tech name. It's the backbone of government contracts and AI-driven data solutions. When markets anticipate a rate cut, growth companies like Palantir often get a tailwind. But here's the catch: Palantir can be volatile. That's why dollar-cost averaging, buying small amounts over time, is the smarter play. Instead of chasing spikes, you build conviction steadily and let the story unfold. Because if the Fed does cut rates, Palantir could be one of the names that surprises investors with momentum. Now Archer Aviation. This is where innovation meets speculation. Electric air taxis sound futuristic, but the company is already testing prototypes and securing partnerships. Rate cuts tend to fuel risk appetite, and that's when speculative names like Archer can really take off. Still, it's not about betting the farm. It's about averaging in, keeping exposure small, and letting time decide whether this vision becomes reality. So between Palantir's data dominance and Archer's futuristic transport, we see two very different plays, but both remind us why patience and steady investing matter. Next, let's look at Applied Digital, Grab, and Nvidia. Each with their own role in this month's market outlook. Applied Digital is building the backbone of data centers with exposure to crypto and high-performance computing. It's volatile, no doubt, but that's exactly where dollar-cost averaging shines. By buying small amounts over time, you smooth out the swings and position yourself for the long-term demand. In digital infrastructure, because if rate cuts fuel tech expansion, Applied Digital could be one of the quiet winners. Grab is Southeast Asia's super app ride-hailing, food delivery, and fintech, all in one. It's a global diversification play, giving investors exposure outside the US markets. Rate cuts often spark international flows, and Grab could benefit as investors look for growth beyond familiar names. Think of it as a foothold in a fast-growing region where small positions today could compound tomorrow. And then there's Nvidia, the crown jewel of AI and semiconductors. It's already a market darling, but here's the suspense. If rate cuts arrive, Nvidia could ignite another leg higher for investors. The key isn't chasing the hype, it's averaging in, building exposure steadily, and letting the AI wave carry you forward. From infrastructure to global growth to AI dominance, these names highlight the market's range of opportunities. But the real question is, how do you invest without getting caught in the swings? That's where dollar-cost averaging comes in, and we'll explore why it matters. We've looked at the stocks, but now let's talk about the strategy that ties it all together. Dollar-cost averaging. Dollar-cost averaging, or DCA, means investing a fixed amount at regular intervals no matter what the market is doing. Instead of trying to time the perfect entry, you spread out your buys and let the averages work in your favor. And here's the twist. When markets are uncertain, DCA isn't just safe, it's powerful. Rate cuts, inflation data, earnings surprises, All of these can swing prices, but with DCA, you don't have to predict the swings. You just keep building. For everyday investors, this is the difference between stress and confidence. You're not chasing hype, you're not panicking at dips, you're steadily building positions in names like Palantir, Archer, Applied, Digital Grab, Nvidia, or any companies that you are invested. Think of it as planting seeds. Some will sprout faster, some slower, but over time, the garden grows. And in a market where the Fed could cut rates, those seeds may bloom sooner than you expect. So, whether you're new to investing or refining your strategy, dollar cost averaging is the anchor, and that's why it matters. Now more than ever. That wraps up this month's market outlook. We've explored the Fed's possible rate cut, spotlighted stocks from Palantir to Nvidia, and uncovered why dollar cost averaging is such a powerful strategy right now. Remember, Vince is still steering the ship. He's just letting me take the reins for this episode. He'll be peeking in from time to time, but for now, I'll keep guiding you through the twists and turns of the market. If you enjoyed my takeover, let us know in the comments. Did my breakdown help you see the market differently? Hit like, subscribe, and share your thoughts. We're building this journey together. Because the next move could change everything, and you'll want to be here when it does. So in true Vince fashion, here's wishing you a blessed and financially successful week ahead. And I'll see you on the next episode of Chump Change Investments.